So here we are, we're on oil, out on the weekly. And the first thing to note, of course, I know we're looking for a shorter term trade here, but the first thing to note is this big significant resistance level that came in here. Okay, it was just above the $75 a barrel. In fact, quite happy to pop in resistance level of that $75 a barrel. Okay, let's just set that. I'm going to put it bang on 75. Okay, the reason I'm happy to put it straight to 75 is we've failed to close above multiple times. Okay, we popped out above, failed, closed, retested and sold off. Here we failed, retested, sold off. And when we come back in time, this level has been in play, looking right the way back here, perfect 75. This is 2011 when we were last back testing this level, and the same again back here in 2006. So this is a super long-term resistance level that has been perfectly respected. We saw strong sell-off back through here, following on from this lovely, again, I know we're looking a long way back. We want to see how the price reacted at this level previously. Big shooting star here on October of 2018, followed by a bearish engulfing. Okay, so we're seeing these two combined here, the shooting star and bearish engulfing together, and then strong. We saw multiple weeks worth of selling back down to the next lows back through here. In terms of candlestick patterns right now, we haven't seen a clear reversal pattern as we did here. We're also seeing a much stronger bullish run. So this had some quite heavy setbacks in here. In this instance, we've had one pullback and the rest has been incredibly bullish. Now we did have a candlestick formation here, which is a long leg doji. Okay, so long leg doji suggests indecision in the market, and indecision in the market typically suggests reversal. And that's what we've seen. Of course, we've seen this market set back now last week, strong sell-off towards the start of this week before bouncing back. Alrighty, so we are at big resistance, but clearly we can see the length of this lower shadow. There's a lot of buying pressure within here. Now let's bring ourselves back into the daily. Now the moving averages I've got on this chart here at the moment are the 50, the 200, and the 100 period moving average. And they're just simple moving averages. And we've got here at the moment, the pullback came back to a lovely little level. Okay, we can see the previous resistance back from 14th of March. We failed again once, twice, 3 times, broke clean through, retested as support. And then we got another long leg doji, didn't we? When we came down to the lows here, aggressive sell-off, came down into that 100 period moving average, the black line here, black hashed line, failed really to break, didn't it? It popped its head below. The indecision candle formed at the support level in and around $66, $67 a barrel. Indecision candle, again suggesting reversal of this downward move for continuation to the upside. Okay, so these moving averages here all fanned out, pointing upwards, suggesting bullish pressure. We've also, of course, got this resistance become support, acting as support, and in line with that, then we got the candlestick. Now, the longer term fibs here, interesting to see if this was a healthy retracement. From a trend perspective, I want to be fibbing ideally from a higher low to a higher high. So if I'm starting on my way up through here, this is my first higher high. Let's just copy that up to my higher low. We need to see, don't we? We need to see the break through the high to suggest trend continuation. So this little swing here, I'm not too worried about. Okay, I'm waiting for the break through the level. So this is my new, that's the current higher high. So when this market pulled back, when this market retraced, did it come back to a Fibonacci level? Let's take our fib tool, take it from the previous higher low up to the high. Okay, and there we can see we dropped back down into that, just broke through the 50% region, stretched down, came up just shy, well, not far shy of the 61% fib, where we formed that indecision, and now we've snapped back. So this whole junction through here was a strong primary support level with multiple secondary levels also confirming. Okay, let's bring it back out of the daily, and let's just have a look on the lower time frames, bring up that 4 hour, and let's just have a look and see. We did that. Yeah, see that level through here now. There's that daily level that we drew. Looks a little bit more chopped up here on the 4 hour, but look at the most recent interactions. Okay, when we're looking at the price most recently before this bounce back, look how the price rides above that level. Pops its head below, immediately comes back up above, Then it fails once, twice, 3, 4. Again, I want to bring our attention to this big long lower shadow here, suggesting significant buying pressure before eventually this market does manage to turn around. It breaks out of this consolidation with the highs being back here of that little range, that little pause, and then we've moved higher since then. Okay, so the 4 hour there confirming that daily level quite nicely. In terms of where we are now then, okay, we've got a few big signals here on the 4 hour moving averages. Okay, we have what we call, we haven't quite actually, I was about to say, no, we have. About to say we've got a dead cross, and we absolutely have, in fact. Okay, the 200 period moving average, the red one here, and the 50 period moving average, the blue one, we have seen this crossover. Now, both of those moving averages are just pointing lower, okay, and we need that to be the case. We need the 50 and we need the 200 to be pointing lower to give us a sell signal. Okay, so this is now a bearish signal. The price has also crossed down below these moving averages, and these moving averages will now potentially act as support for us, the same as we saw them act as support here. They will now potentially act as resistance for us up through here with that 200 and that 100 sat just above the price at the moment. And when we did break below it, we can also see here it acting as resistance. So certainly some roadblocks ahead for us here. And also, you know, with oil, we are now technically in a downtrend. Let's just remove these circles. Let's grab a new circle. Okay, I'm just going to start, don't need to go all the way back. I'm just going to start from the lows here. Let's make this green so we know we're in a nice uptrend. Okay, let's just copy that ellipse. We're coming up, we're going to just be looking for those breaks of higher highs and higher lows. Up we come again. Quite happy to say that doesn't close through. Okay, important for me, it needs to be a close through the high for it to be a break of the level. Okay, so the close doesn't come until here. Let's copy that through again. So they were the higher highs and higher lows on oil. A break through the previous higher low here at 71.74 is confirmation that the uptrend has come to an end. So we did break down through that. That break of the higher low sent us into a sideways market. Yeah, that sent us into a sideways market. It cancelled out the uptrend. Since then, we've seen confirmation of trend reversal by breaking down through 70.32. Okay, because now we are in a succession. Once I break down through that low, we're now in a succession of lower highs and lower lows. Okay, so this now suggesting a more bearish move. Now this is where time frame becomes important, because that is a very different perspective to the daily, isn't it? The daily chart is suggesting uptrend still intact, 50-61% Fib retracement achieved, and therefore most likely outcome, we are going to continue and move higher to break the highs and make our way potentially up towards that $80 a barrel marker. Okay, again, that big psychological round number. So talk about time frame analysis on the course. You know, this is so important. Okay, because now we've got conflicting views. Are you going to prioritize the daily time frame to go long, or are you going to prioritize the 4 hour trend to look to go short? Very different messages. Now, I would suggest we are at that massive monthly level. Okay, a multi-month resistance level. Perhaps that resistance has held and is going to be the driving force for this market to turn around. We can take confirmation, or if it's going to or not, from a fib perhaps. We're in a downtrend here. So if this market is going to sell off again, we would expect it to do that potentially from a 61% fib retracement. So we come up to the highs, down to the lows. We can see here that wherever I take the fib, if I take it to this low or this low, the price has broken through our 61% fib retracement. Does that lead us to be more bullish or bearish now? Yeah, fundamentals hugely important with oil also, absolutely, Alan. Yeah, very good point. Okay, we've got OPEC Plus, of course, have been in the thick of it at the moment, trying to come to some sort of a deal. And we've seen bombings, you know, and drone attacks through some of the oil fields. So there's huge fundamentals in play in this as well, certainly. So that constant battle between fundamental and technical, you know, regardless of what's happened fundamentally, you know, this chart, you can see the way it's panning out, right? It's panning out incredibly technically still, despite all of that. So Certainly something to be aware of though. Why not taking the fib from the previous high? Okay, so question coming in here, why not take it from right the way up here? We are looking to go with the trend. Okay, when we are fibbing a trend, we're looking for continuation of a trend, and we always come from the lower high to the current low in a downtrend. Now this up here was the higher high of the uptrend. The most recent lower high for the downtrend is this marker here. So that's the one that I want to be taken into account. Okay, I don't want to skip out the swing. Alrighty, so we've broken through the 61. Now that could be a reason to again continue being more bullish in this market. The candlesticks would also suggest bullish, right? We've had this big impulsive candle up. It's almost a Maribozu. Okay, it's almost a Maribozu. It's not quite. And very interestingly, look, the red line is one of the previous lows, the higher low. And that was the significant higher low that broke in the uptrend. And that has now perfectly gone from being support, and it has now become resistance. Okay, so we're perfectly coming off it numerous times here. Okay, but this big, strong, impulsive Maribozu, which failed to close through that level, has been followed by 3 very slow corrective pullbacks. So for me, I would still favor the long. However, moving averages in the way here on the 4-hour, and we've got to get through these highs and through this little resistance level. Okay, so we'll bring ourselves down now into the lower time frame and see what else we can see. Okay, so again, onto that 30-minute chart now. We're just making our way down through these time frames, aren't we? We can see the nice uptrend that's been established. Okay, we can now start to see the pivot points. I don't want to be too dominated and overwhelmed by the pivot points. Okay, they are there as additional support and resistance levels, but they shouldn't be the defining reason for your trade. Okay, it's why I tend to look at them last. Okay, rather than looking at them all the way through the setup, I don't want to be influenced by them right at the start of the trend. Now, what I can see here at the moment in oil is a succession of higher highs and higher lows. We can see that slow pause and that consolidation, and we can also see, where's my horizontal line? There it is. Can also potentially see this little resistance from these highs back up through here, with now that weekly pivot point sat just up above. Now, if we look at the multiple time frames, okay, and I'm just going to change the setting on this line so we can see it across all time frames. See this resistance from these highs. Okay, I'm going to put it right onto the top of these. Resistance once, twice, 3 times. It sits right at that weekly pivot point. So that whole zone through there is going to potentially act as resistance for us. And that is also perfectly in line. Looking back to this 4-hour now, look how in line that is with those moving averages. Okay, that black line is running perfectly parallel and in line with the 200 period moving average. So that junction point there now, should that break, becomes a significant moment for us. Okay, so longs in oil, I think we're looking long should we get through that pivot point and through that resistance and through the 4-hour moving averages. Stop losses can be back below sort of 71.20, back below the support levels here. Possibilities for shorts to come into this market, certainly we could see a breakdown through sort of 71.35 and a move lower back down towards this support region just above the $70 a barrel. However, with everything that we've seen so far, the daily trend looking quite so bullish, the 4-hour chart breaking through the 61 fib and currently still looking bullish, I would still rather favor the long in this instance. Okay, I would rather favor the long, but I am going to wait for a high level of confirmation, and that is going to be a break through multiple levels up through here before we look to be a buyer of this market. Okay. One concern for going long, to be consistent with some of the other setups we've done today, is our divergence. RSI divergence. We've got a very different picture this time around. We've been overbought, significantly overbought, and we can see now these lower highs being placed in on our relative strength index, suggesting a potential corrective move on the card. So we see those, we can see those lower highs on the RSI and higher highs up here on our price action. Okay, and that supports the corrective move, but that is secondary. That is a secondary signal. Okay, I want to prioritize the primary signal. Okay, don't lose sight of the fact, but we would also have had divergence here. at this point here, if we couldn't see any of what happened next through there, I would also have said, okay, well, I've got higher highs on the price, I've got lower highs on my RSI, I'm overbought, that is bearish divergence. And then of course this market continued to rally and it bounced off the 50-period moving average and went long. So it's happened before when we've had divergence and continued going up, and it could certainly happen again. Okay, so primary is in play here, daily trend is up, 4-hour trend is down, but we've broken through the fib. Candlestick formations, yesterday was a bullish close. The 4-hour candles have had some bullish closes with a little bit of indecision through here. And if we can see a break through resistance, through the pivot and through the 4-hour moving averages, oil could be set loose to make its way back up towards that $75 a barrel marker. And that $75 a barrel, perfectly marked here, is in line with this previous set of highs from the 14th of July. Okay, so potential nice strong resistance level for us up through here. Alrighty, so that's the state of oil at the moment. Okay, again, another interesting chart. All of them now, you know, they're breaking, they're at real crunch points. Okay, well, they really are at crunch points. We've had big sell-offs, we're bouncing back. Are these going to continue to move higher? For the time being, I would remain a buyer of oil. But shorter term trade, perhaps opportunities with that bearish divergence and a move away from this level back down towards 70.30, something like that. Okay, last quick look towards what the entry might be for that short position into that 5-minute chart. We need to see a break of support. And have we got a clear support level to be breaking? No, we don't actually. Okay, we really don't. The monthly pivot is holding firm here, support a couple of times, but that's a secondary level, so I can't use that as an entry level. My only option is perhaps a trend line through here, this little 3-touch trend line here. Let's just turn that solid so we can see it. First touch, second, third, we could potentially be short back down to this support level at 70.32.